In order to expedite the introduction of new models prior to the aforementioned commencement of production in the second half of 2025, we have made updates to our lineup of future vehicles. Therefore, we anticipate it to be late this year, if not early 2025. These new cars, which will include more reasonably priced versions, will be able to be manufactured on the same lines as our present array of vehicles and will incorporate elements of both our current and next generation platforms. Tesla mentioned speeding up the release of new models that would use elements of both their current platforms and the next generation platform they have been discussing. The production lines used to generate the existing lineup of vehicles would also be used to produce these vehicles. Every quarter, including this one, the market speculates that competition will halt growth, erode share, and erode profitability. That hasn't occurred, though. When it comes to drivetrains, engines, chipsets, and batteries, no firm has yet to achieve the efficacy, efficiency, and productivity that Tesla has. Since Tesla was the first to market, there is a moat around it, but they have kept their share through innovation. This individual is criticized for a variety of reasons, but ultimately, when you ask someone if they want to purchase an electric vehicle, what do they want? A Tesla is what they desire. Due to a dynamic market and a quickly evolving technology landscape, Tesla, one of the industry leaders in electric vehicle innovation, has experienced its share of ups and downs. Following CEO Elon Musk's announcement that the electric vehicle manufacturer intends to start producing new, reasonably priced EV models by early 2025, Tesla shares recently saw a 12% increase. Kevin O offers his thoughts on everything from possible privatization tactics to financing plans that take advantage of the higher stock price. We can observe that Musk's actions are both audacious and well thought out. Furthermore, these tactics take place in the midst of more general economic difficulties, such as supply chain interruptions, inflationary pressures, and geopolitical unpredictabilities, all of which complicate Tesla's business climate. Keep checking back as we examine the complex web of variables influencing this trailblazing company's destiny. Please remember to activate the like and subscribe buttons before we begin. Let's begin this video and welcome to Tesla Stock News. It is evident that Tesla continues to have a significant influence on the direction of the electric car market as we shift our attention to it. Tesla is known for its quality and creativity, and it has established high standards that propel the sector ahead. But there are several obstacles in the way of mainstream EV adoption, which Tesla and the industry as a whole must overcome. The infrastructure needed to support EVs, especially in terms of charging stations, is one of the main challenges, according to Kevin O, a well-known Canadian businessman and Shark Tank host. Even if charging stations are becoming more prevalent in urban areas, making short excursions and everyday commutes easier, things take a turn for the worst once you leave these places. Due to the limited number of charging stations along highways and in rural regions, long-distance driving continues to be a major challenge for EV users. Consumer behavior and attitudes about the viability of owning and operating an EV for all forms of transportation are greatly impacted by this infrastructure gap. Furthermore, the rate of electric car adoption has lagged behind early hopeful projections. As consumers face the realities of incorporating these vehicles into their daily lives, the enthusiasm that greeted the launch of new EV technology has subsided. Slower adoption rates are caused by issues like the longer charging time for EVs compared to conventional vehicles and the greater initial cost of EVs. The possible privatization of Tesla is one of the most discussed strategies. According to Kevin, if this idea is implemented, it might revolutionize the business by giving it greater freedom to create free from the constraints of market volatility and quarterly profit reports. Kevin O adds that taking advantage of Tesla's recent stock surge is a crucial part of Musk's approach. This is a good time because the stock is up about 40% from its recent lows. Instead of depending on large debt loads, Musk's plan probably calls for using the high stock price as a basis for funding. This tactic is especially clever since it lowers Tesla's debt load and financial risk, thereby leveraging the market's momentum to the company's benefit. Additionally, Musk's strategy might involve speaking with current shareholders who are institutional investors. In addition to obtaining the required funding, Musk would guarantee that these significant stakeholders continue to be involved and supportive of Tesla's long-term goals by possibly including their current shares into the privatization agreement. This might lessen the need for significant outside funding, facilitating the privatization process while preserving investment and ownership stability. Musk is putting Tesla in a position to make big moves without the limitations that usually accompany being a publicly traded company by skillfully utilizing the state of the market. Every industry in the modern global economy is battling a number of macroeconomic issues that affect its operations and strategic orientations. Supply chain interruptions and inflationary pressures are two major obstacles that Tesla, like many others, must overcome. These difficulties are not insignificant. They affect cost structures, production schedules, and, eventually, consumer prices. Supply chain problems, especially in the automobile industry, are frequently caused by logistical bottlenecks, delays in raw material supply, and shortages of vital components like semiconductors. Companies are under tremendous pressure to stick to their production schedules and control costs as a result of these disruptions, which can result in lower production volumes and higher costs. In order to reduce the risk associated with supply chain volatility, Tesla has been navigating these challenging seas by expanding its inventory of essential components and diversifying its range of suppliers. Another significant obstacle is inflation, which reduces Tesla's purchasing power and raises operating expenses. This entails managing the growing expenses of components and raw materials required for the manufacture of vehicles. As a result, Tesla has taken the initiative to adjust its price policies and look into more economical production techniques in order to preserve revenue without sacrificing creativity or quality. With new factories and key sites worldwide, Tesla is also growing its manufacturing footprint. In addition to lowering the danger of local political or economic unrest, this geographic diversification puts Tesla in a better position to access important markets, which lowers transportation expenses and boosts supply chain effectiveness. The company's dedication to innovation complements its proactive approach to resolving economic issues. To keep its goods competitive and consumer-friendly in the face of wider economic constraints, Tesla keeps spending money on research and development to advance battery technology and boost system efficiencies. The Tesla adventure doesn't end there, though. It's much more fascinating because every day is a new discovery with ups and downs. For this reason, Tesla continues to attract more and more investors. However, are you aware of anyone else who is as optimistic about Tesla? That would be Seeking Alpha, today's sponsor. There is more to Tesla's remarkable success than merely watching from the sidelines. With the most recent information on Tesla, stock price targets, innovation, and all things Elon Musk, Seeking Alpha is the one-stop shop for Tesla bulls and those with an eye for finding the next big thing in the stock market. Avoid the mainstream media's anti-Tesla clamor. The greatest online source of pro-Tesla news is Seeking Alpha. Our channel may receive a commission if a customer makes a purchase after clicking on the affiliate links in the description. I appreciate your help. An impressive example of creativity and daring design in the automobile sector is Tesla's Cybertruck. With its futuristic angular design that stands in stark contrast to conventional pickup trucks, the Cybertruck was unveiled with great excitement and represents Tesla's efforts to challenge established automotive conventions. With its armored glass windows and stainless steel exoskeleton, the Cybertruck aims to redefine vehicle performance and durability in addition to being aesthetically pleasing. The Cybertruck has attracted a lot of attention and pre-orders since its launch, demonstrating high consumer curiosity and market interest. This excitement is a reflection of the Cybertruck's potential to enter the profitable pickup truck market, which has hitherto been controlled by gas-powered automobiles. With an all-electric truck, Tesla is entering this market, which is consistent with its larger plan to hasten the global switch to sustainable energy. The Cybertruck's striking appearance isn't just for show. It represents Tesla's strategy of completely reinventing vehicle architecture. With characteristics like exceptional cargo capacity, towing capability, and off-road performance, the truck's design maximizes both